Do you want to trade crypto, but you don't know which strategy to implement? Well, in this video, I'm going to share with you my favorite trading strategy and also show you a live trade that I'm about to put in and my reasoning behind it. Now, before we jump into this, one of the toughest things that people do not understand about trading is you cannot force trades, okay? You cannot create the trade in the market unless you're George Soros and you're moving tens of billions of dollars on leverage. You're not going to be able to move this market, all right? So what you need to understand is you need to be able to trade when the market presents the opportunity. If there is not an opportunity, do not force a trade. You can't just come home after work at 4 p.m. and say, hey, market, I want to trade now. Put me into a great trade, right? You're going to end up losing because you're trying to force your trades. So what we've been analyzing is, if you guys just watched the last market update, right, where the price of Bitcoin went way down and we said, hey, we're probably going to trade into this zone. And that's exactly what's going on, is we're trading into this zone right here, right? So one of the strategies you could implement, which is not really my favorite, but it's definitely viable, is finding these types of zones where you can hit along down here at support and then sell at resistance. You usually want like a 2-3, right? So you want like a confirmation here, right? That's one. You've got one up here. Two would be here. This would be the second one, and then the third one. So there's two up here, three up here. So 2 and 3 bounces off of support and resistance, and then you start to trade the zone. So at least you have somewhat of a confirmation, and then you can hit along at the bottom of support and exit at resistance. A better strategy and more profitable strategy is to trade less and actually rip larger trades. And you'd want to do that when you actually have a confirmed trend move. So you're a break of an actual trend. So we're in a downtrend right here. If we have a break of this resistance right here, that would be a break of the trend. So we want to trade a trend not before the trend actually happens. We want to trade the trend when it confirms and actually breaks that trend. Okay? So when you don't have a confirmed trend, it's very, very difficult. That's why when you have massive sell-offs, and we had a massive sell-off earlier this year, right? It's very difficult to trade after this time, because you got to be able to let the market kind of stabilize, build some structure, and then have an idea of what's likely to come next. And that's exactly what just happened, right? We had a massive wick. That's typically what happens. We have a big sell-off, and then we consolidate into a zone, and then we can have somewhat of idea what we want to do here. All right, so let me kind of jump into this. Before I do, I think this is probably one of the most important things I can mention, is you need to understand what portion of your portfolio is actually going to be put into trading. So I'm about to show you a leverage trade. I allocate 5% of my portfolio right now for trading on leverage and speculating. So when I'm buying really small cap coins that are under a $50 million market cap, or I'm using leverage to trade, I only do that with 5% of my portfolio. The reason is because if you can manage not to lose money in crypto, you're likely to do very, very well. So I want to have proper allocation where I have longer term investments, right? The 60% of my portfolio, I am practically never selling. Yes, if something fundamentally changes with a certain position in my portfolio, I will get rid of it and replace it. That's another principle I want to bring up, is the best investors are always open to change, because they understand as more data comes in, I may need to actually change my allocation, because now I have new information, I have new data, then I can make an intelligent decision. For example, and I'm not telling you this because I'm dumping Phantom, this is just one example. It's like if we look at, Phantom fundamentally on Phantom's block explorer, you can see the daily transactions declining. Why does this matter? Because the more transactions on smart contracts that have their own blockchain, right? Every transaction on a chain requires to use the native coin for a fee, right? So that's why the Phantom coin FTM has real utility, is because every transaction generates a fee and it uses the FTM coin as a gas fee, just like Ethereum and ETH. As these transactions continue to decrease, you can see we're in a downward trend with Phantom over the last 3 months. That's not something fundamentally that excites me. I want to see up and to the right. All right, with Harmony, for example, we're starting to see a ton of their transactions picking up. So we were at below 1 million, I don't know, 6 months ago. Then we went to 2 million a day. Now we're at consistently 3 and 4 million transactions per day. If you can see what I'm looking at here, 4.6 million transactions, 4.6, 3.4. 3.4, we had one that was 2.8, and then we had 3.5 again. Also, the wallets are steadily climbing, right? So that's an example of strong fundamentals. The number of wallets that are using the Harmony blockchain are expanding. The transactions per day are expanding. That's the type of stuff that I want to look at. Same thing with Bitcoin, right? If we're looking at Bitcoin fundamentally, let's look at some fundamentals on Bitcoin. For example, the exchange balance, right? This would be another example of fundamentals. You can see a bunch of Bitcoin moving onto exchanges at the beginning of its life cycle, and then all the way up in 2020, right? In March 15th, you see Bitcoin going off of exchanges, going down. That's strong fundamentals, but this is really long-term because we're looking at over decades period of time, right? So I want to help you kind of understand this trade. What we look for, obviously technicals, right? On a technical basis, hey, are we breaking a trend of the RSI, right? We had these downward sloping trends of the RSI. This was very, very obvious back in April and May, where we had just had consistent lower highs, right? We want to see a trend reversal of the RSI, which is the relative strength index. We can also use market cipher. What I like to see is the green dots down here. Then I want to see this purple line cross above the red or green line. Preferably it's already green. And then so I'm just kind of waiting for this purple line to cross above the red line for this red line to turn green. And that's likely a confirmed heading into a bullish upside. Okay, so that's examples of technicals. I also like to look at fundamentals like I was just mentioning. Okay, then once I have looked at those things, I want to actually plot a trade. So what we've seen historically is we've seen big sell-offs, right, over the past like 6 months. Big sell-off, consolidating into a zone, lift off. Big sell-offs, consolidating into a zone, lift off, right? So that's what we want to look at, are those things. We are starting to potentially break the RSI here. It'll be very, very interesting. I think it has a lot to do with what the stock market does this week. But what I'm going to do is I'm going to show you a trade that really allows you to not risk very much of anything. First of all, you risk nothing if the trend does not reverse. And secondly, if it does reverse and it turns out that your thesis of the trade was wrong, right? So we're plotting a thesis in our head right now. Hey, is the price of Bitcoin going to go up? Why is it going to go up? Oh, fundamentals, technicals, all these things that we're looking into. And then if it does go up, right, we're in a trade. So I'm going to show you an example. It's called a conditional trade. So what I want to do is I want to zoom in into this zone. And what I want to do is I want to rip a trade when it breaks this resistance right here. All right. And what I would prefer is it for to actually not only break this line right here, this resistance line, but I also want it to break a previous swing high, which is really this one. That'll confirm a reversal for me, right? So I want to see this not only break this blue line, I also want to see this break this previous swing high right here, okay? For me to have the confidence to go into a trade, right? So I'll show you a conditional trade here. Then let's say we do hit a trade here. I don't want to just scour over my computer all day, right? I do other things. My time is very, very valuable. I don't day trade. I like to swing trade, which is like trades that play out over a week or 2 weeks. What I want to do is I'll show you the conditional format here in a second. But let's say that the price was there and I want to hit a trade right now. Well, I want to stop loss below the previous swing low. Okay, so I plotted this where I put my stop loss all the way down here. If we break this zone, then we head lower and we break this trend and we break this previous low. Well, I want to be out of the trade. Okay. Because that would pretty much prove my thesis to be wrong if that happened, right? If it broke above here, then it went down low and hit my stop loss, I would be proven wrong. Okay, but what I like to do is have an exit position too, my take profit zone. So I'll look at the previous all-time highs. I don't want to perfectly time the top. Usually you see a lot of resistance at the peak prices. If you look back historically, typically you see a lot of resistance right around the previous all-time highs, right? We saw one here. We had a little bit of resistance. It broke above, had a little wick that came above, then we came back down, right? I want to catch that. So I do not want to perfectly try to time this. I actually want it right below where we've had a few confirmations of resistance, and I want to be able to catch that before the actual high. You know, and then if we break the resistance, we have a clean break of resistance, and we start to go into price discovery, well, that's a completely other trade, right? I don't need to get too greedy on this trade, right? I want to catch this all the way up to the previous swing highs here. Okay, so my take profit would be right around 66K. All right, so I want to enter this trade if we break this resistance and we break the previous little swing high right here. And if we do, I want to have a stop loss here and a take profit at 66K up here. Okay, so that would put my risk reward on this trade to be, let me expand this so you guys can actually see this. My risk reward would be 3.59 is what the risk reward ratio would be, which is a great. I like to see it between 1.2 and 5, to be honest. Preferably it's higher because that means you're risking less to potentially gain more, right? So I'm going to show you exactly how to do this. I think one of the best trading platforms, you could use Binance.com if you're out of the United States, or just go on a VPN and go on to Bybit. Right now, what we're looking at is a leverage trade on Bitcoin USDT. So I just put a little bit of USDT in this account, and I'm going to show you an example here, right? So instead of entering a limit order, which I'm sure you guys have heard of, or a market order, where you're just getting in at the current market price, I actually want to get in at the price that I want to get in. And if what we're doing is we're saying, if price goes to this, then this and that and this, which I'll show you right now. Kind of like an if statement on Excel. So we want to mimic this trade, right? So we like to plot it first, have an idea of where it's at, right? So our entry price will be right above that previous swing high, which is right around 49,600. But let's actually go to Bybit, and I'll show you. We'll zoom in here as well. So we want to hit a trade if we are right above the previous swing high, which would be confirmed if we were at really 49,900. Okay, so 49,900 is a trade that I would want to be in once we actually broke that resistance and broke this previous high right here. Okay, then we say that's going to be the trigger price. If price goes to that, then we're going in at a market order. So we're likely going in right at around that same price. Okay, I'm okay if right now we're doing a cross margin 10x. This is going to be my only trade, so I'm completely fine with doing cross margin. Typically, you want to do isolated margin if you want to reduce risk, but I'll do a 50% of this cross margin trade, and then you'll see my actual like liquidation prices and things. It won't be, it doesn't really matter because I'm going to have a clear stop loss in here. Okay, so take profit, like I mentioned, will be at 66,000. If price breaks 49,900, it'll put me into a market order. I'll ride that trade up to potentially 66,000, and then I'll exit the trade and take profit there. Okay, so my profit would be $14,924, and I'm putting about I think like 9K, or no, way less than that actually. That's a 10x, so a relatively small amount. Stop loss we'll put in at 45,000. I would want to be out of this trade if price broke above at 49,900. If it hit that, it came back down and went past this previous swing low at 45,000. I would want to be out of the trade. I'm completely fine losing. So I would lose 4,500 bucks. So I'm risking $4,500 to potentially make $14,924. Okay, then I would hit open long, and you'll see I am not actually in the trade. It's a conditional trade, right? So I have no positions. It's conditional, meaning if price goes to this green dotted line up here at 49,900, it'll put me into a 10x leverage trade. Okay, then I will be in the trade. If price then goes past that, comes back down, so it breaks the trend, and then all of a sudden it starts to create a new trend back, and it really kills my thesis of the trade, I will be out of the trade at 4,500, and I would lose a small amount of money. Okay, and if it continues, we break this trend, we continue higher, and we go to where I believe we're likely to go of $66,000. Well, I would be in that trade, and I would profit much more than I'm risking. Okay, so that's an example of trading a newly established trend where we're actually breaking resistance, but you're using a conditional trade instead of just ripping a leverage trade whenever you feel like it, right? You're letting the software and the exchange put you into a trade when you feel the trend has now reversed and it's likely a great trade. Okay, hope you got some value from this video. Let me know what you think about this trading strategy below. Do you use leverage? Would love to know what exchange you use, because there's a lot of new like cool exchanges. The problem is there's not a ton of liquidity on a lot of the new ones, and that can be, become an issue, especially if you're trading a significant amount of capital. So let me know what you thought about this video and this strategy in the comment section below. And if you get consistent value from my channel, why not just rip the red button that says subscribe